Hello, everybody. Welcome to Tuesday. The S&P 500 was down just a little bit today, 0.16%. Wasn't a real bad day, actually. The broad market did better. The Dow was up, just some, a little bit of the tech sell-off and what have you that's happening. But the main story of the day, there's some other sub-stories, but really, of course, is still the ongoing trade dispute between the U.S. and China. So overnight, China sanctioned a couple of U.S. subsidiary shipbuilding companies in South Korea. And basically, that kind of got the market started off down quite a bit as far as that goes. And then market was coming up, doing really well during Chairman Powell's talk. He talked about, at least insinuated that looks like we're going to have a rate cut in October, and that by the end of the year, they might stop the quantitative tightening. So the quantitative tightening is where they're taking money out of the economy. Essentially, in this case, they're selling bonds off of their balance sheet, letting them expire, which subtracts cash from the overall economy and slows things down. They're trying to get rid of the bonds that they purchased during the pandemic to try to speed things up. That's a way to add cash to the system, but they're going to stop by the end of the year, it sounds like. And if that happens, that's another positive for the stock market. So the market's up, and then of course it comes down at the end, just because again, you've got the White House talking about, hey, maybe we're going to restrict the export of heating oil to China. Secretary Bessent was speaking and talked about how it would hurt China even more if they stopped the rare earth metals, just because it would slow down the whole world economy and such too. So I think the one thing that's really important to understand here again is that the U.S. doesn't really have significant leverage. If you look at the first half, gross domestic product was in that kind of 1.6, 1.7% range in total. And so if you take out the data center build outs that are happening right now for this artificial intelligence, that drops down to 0.1%. So almost all of the growth that's currently happening in our economy is coming from, this data center money that's being spent to the tune of a projected $4 trillion over the next 5 years. Well, can't build those data centers without rare earth metals. So if they stop the supply of those, it just stops essentially our whole economy because it's the one thing that's really driving things right now. So the U.S. is going to be running around trying to find some different leverage points. I think they made a good point there that, it does obviously affect China quite dramatically if everything slows down. If we stop building our data centers, that's going to hurt China also. And so we'll see how that plays out. Of course, we have a few things like the heating oil and a few other things that we provide, access to U.S. financial markets and what have you, besides the fact that we're a giant market. And so, as I mentioned yesterday, for China, they've been since 2018 when these tariffs first started, they've been getting ready for this kind of a tariff war for a long time. And so they reduced their, exposure to the U.S. And like I said yesterday, that, if you look at September, even though they shipped 27% less goods to the U.S., their exports overall were up 8.5%, this September versus last September. So I think they're going to really put some pressure here on the U.S. The stock market could struggle in this environment if Trump, continues to push, which he will until things start to fall apart. So that's where he does seem to react to some of the things that are happening in the market. If you look at this weekend with the cryptocurrency market, really getting hit very hard. All of a sudden, he's coming out with things basically saying not to worry. We really want to help China. Things along those lines. So there's some possibility that this kind of works out. To the better for a couple of reasons. Number one, the pressure that the China can place on the U.S. could, make something happen faster, and maybe even lower the tariff, altogether with China, just to try to find some spot that they're happy with. But Trump has to be able to, get there. China has to be able to get there. Supposedly their meeting is still back on here for the end of the month, so we'll see what happens. But you're going to get this probably kind of back and forth going on a regular basis. Theoretically, these tariffs, for example, the 100% tariff that they announced against China just this last week is not starting until November 1st. So again, that could be moved back. We've had lots of times where things were moved. They'll talk about, hey, we're in, negotiations. Things are going well. So let's get them till December 1st, January 1st, or whatever might happen along those lines. So I think that's what the market is expecting. It's just this is the big deal for the market is this trade issue. So how that plays out will be very much so how the market ends up playing out here too. So anyway, not a bad day altogether in the market. Things did okay. So we'll look forward to seeing you tomorrow. Thank you very much.